Madam Speaker, notwithstanding the House rules, I move that we revert back to motions.
On that motion, then, without any objections, so ordered.
Thank you very much, Madam Speaker. We are in receipt of a committee report filed on Bill 439-30. It's the bill that the governor introduced. It's an act making appropriations for the operations of the executive branch of the government of Guam for fiscal year ending September 30, 2011, and making other appropriations and establishing miscellaneous and administrative provisions. The Committee on Appropriations has filed a committee report with yourself and the Committee on Rules. So at this time, I move that Bill 439-30 be placed in the top of the second reading file.
On that motion, without any objections, so ordered.
Thank you,
Senator
Madam.
Hospicio.
Thank you, Madam Speaker. I move then that we proceed to the second reading file.
Okay, on that motion, without any objections, so ordered.
Thank you very much, Madam Speaker. Pursuant to the standing rules, I move that Bill 43. I move that we resolve in the Committee of the Whole for purposes of hearing Bill 439-30 and deliberating on this bill, and that Speaker Pangilinan be the as oversight of the Committee on Appropriations lead us in this Committee of the Whole proceedings.
Okay, on that motion, without any objections, so ordered. So we're going to take then a brief recess to allow the committee then to set up.
The Committee of the Whole on the matter of Bill number 43930, an act making appropriations for the operations of the executive, legislative, and judicial branches of the government of Guam for fiscal year ending 2011 is hereby convened. The bill also makes other appropriations and establishing miscellaneous and administrative provisions for the operations of the government and the implementation of the budget. Before we begin, I'd like to just go over.
Can we just agree that we would work off the version as substituted by the Committee on Appropriations, Taxation, Banking, Insurance, Retirement, and Land, and amend in the Committee of the Whole, because the version I moved was the original version that was introduced.
Yes.
So if there's no objections, I move that we work off of this version.
Right.
Just to be clear, Mr. Chairman, that we're working off of the version that your committee reported
Yes.
out. Thank you.
Yeah, and let me just, I noticed that just as committee, as substituted by the Committee on Appropriation, Taxation, Banking, Insurance, Retirement, and Land, and end it there, and we would strike out at this time and amend it in the committee as a whole, I think.
I just did. Yeah, I just did. Yeah, so I make that motion at this time that we work off of this version.
All right.
Yeah, thank you.
On
Mr.
that
Chairman.
motion, to accept the bill and work, yes. All right. Okay, so there's no objections? Bill's accepted. Right, the title of the bill would, or the citation would delete that as amended in the committee as a whole. Okay? All right. Okay. Before we proceed, I'd like to just go over the committee of the whole rules and agenda in the discussion on this bill. We will begin, you have before you the agenda as outlined. We'll begin with the introduction of Bill 439, which will be brief on that I'll provide. Then we'll go into the presentation by Mr. Chris Badassi, Director of the Office of Finance and Budget, and we'll have a presentation on economic data and financial information, and then the presentation on the revenue projection for the FY 2011 budget. After the presentation, we will allow and go into general discussion by each of the members of the body on the general discussion of the bill, and we will allow 5 minutes for that discussion. When we conclude and provide the opportunity to the members for their discussion, we will go into a section-by-section discussion on the bill. Once we get into the section-by-section discussion, motions that will be accepted and in order would be a motion to amend or delete any item in that section. And we will again allow 5 minutes for the discussion on the motions to amend or delete. After we've concluded the discussion on the entire bill, we'll once again provide an opportunity for each of the members to give their general perspective on the bill as amended then, or if not amended, then the general perspective on the bill at the conclusion of the discussion of the section by section. And once the members have the opportunity and take advantage of that opportunity, we will then be in order for a motion to rise and report back to the body on the action taken in the committee of the whole as recommended by the body. So that would be the rules that we will proceed with. Senator Respicio?
Thank you very much, Mr. Chairman. Well, then on item 5, would it be appropriate to recognize motion to add, amend, or delete? What if we would
Yes.
want to add new sections?
Right, that's correct, I'm sorry. So on section 5 would be add, amend, or delete. Right. Okay. Senator Tenorio.
Yeah, Mr. Chairman, thank you for the rules. I appreciate it. It's customary in previous budget sessions that you go, as you said, section by section, in each section, the appropriate actions again to amend or to delete. But further, that you go 5 minutes per member, but there's usually a second round if necessary. Is that the same fashion you're going to use in this committee of the whole?
If there is no other member that wishes to speak, we'll allow a member to speak a second time.
Right, because 5 minutes is really brief in some of these sections.
Okay, all right. Okay. All right. So let me just first make the announcement that the presentation that is being presented, I'm sorry,
I'm
Senator.
sorry, Mr. Chairman, could you just outline the rules of engagement? Traditionally, if a member would like to increase an appropriation in a certain area, they'd have to identify to which area they're going to cut.
That's
So could you please outline that for us so that
That's
we
right.
know how to-
The
Thank you,
budget
Mr.
that's
Chairman.
presented to you appropriates the revenue estimates and what we, the chair will accept a motion in increasing appropriation in one area that you identify an area that would decrease in the appropriation level so that the budget bottom line remains the same. And so that would be the rule with an increase or decrease in the appropriation. If you decrease an appropriation, then you and have an you may then make a corresponding increase or decrease in another category. So on that, I want to announce that the presentation that's being made before the body here, including the committee report, has been posted on the website under the title FY 2011 Budget, and you may find that at www.senbenp.com/OFB. So at this time, I just wanted to outline, there were some questions earlier about, of course, the revenue projections, and then the spending plan that is being presented as contained in the bill. The bill as presented to the body was originally submitted by the governor to the legislature as required by statute in January of this year, by January 30. At that time, the revenue projections available under general fund resources that was presented in the January submittal to the governor totaled $585 million. As you know, the Office of Finance and Budget, upon receiving the submittal and the Committee on Appropriations, began analyzing and looking over the revenue projections, the component of those revenues, and the total amount that was included in the governor's submittal. It was evident, as many of the members of this body knew, in following the revenue projections for this fiscal year, that the revenues were not as approved by this body for expenditure for FY 2010 were not on target, and they were lower. The actual collections were lower than the revenue authorization or the expenditure authorization. This, of course, required that we re-examine the $586 million total revenue projection available or target given to us by the governor in the bill that in the proposed bill that he submitted. We convened the SES, which is the or the SAS, which is the Special Accounting Service Group, which are statutorily created by this body, to take a look at the financial experience under the current fiscal year, and we began gathering and re-examining the assumptions that were made in the development of this fiscal year's budget, and where we went off track. In addition to gathering the technical data, the committee also convened this Special Economic Service Group, which were the more policy level group that examined then what we need to do and look at in arriving at a revenue estimate for this upcoming fiscal year. In addition to that, we continue to work with the administration and the governor's office, BBMR, to have them review and reassess the $586 million level. We came back in a continuation of the budget bill hearing last week with the Office of the Bureau of Budget and Management and the governor's financial team representative to present them with an opportunity to make a new presentation or a revised presentation to the body with regards to the revenue levels that were submitted back in January. The governor and his staff continued to cooperate with the Office of Finance and Budget and the Committee on Appropriations, and they actually then went on the record and revised the revenue projection for FY 2011 to a level of $540.96 million for FY 2011. The OFB continued to work with the Special Accounting Service and the Special Economic Service Group to now take a look at that 540 number and re-examine again, given the additional information that we've continued to gather on the actual experience of what's happening in the economy between the original submittal and even the revised submittal, and we looked at our assumptions and again compared them to the revised assumptions by the governor's office. This led the Office of Finance and Budget and the Special Economic Service Group to meet one last time prior to the finalizing the numbers in the budget. We presented the revised the number by the Office of Finance and Budget based upon the revised administration's revenue level, and the OFB and the Special Economic Service Group agreed that a number would be adopted for the purpose of recommending to the Committee on Appropriations for revenue levels of 535.3. So this continued analysis and reanalysis of the economic data allowed us to close at least the revenue gap estimates between the original 586.5, 540, and the final number accepted by the Committee on Appropriations of $535.3 million available from the general fund. And it is that number that is being used in the Bill 439 as the basis for the expenditure of, to meet the expenditure requirements of the Government of Guam's departments, agencies, and semi-autonomous agencies and branches for fiscal year 2011. In addition, because of course the expenditure plan that was submitted by the administration in January was based on 586, the revised number to 584, which happened only last week, the administration has not at this time finalized recommended reductions in the expenditure levels for the departments and agencies based upon the revised 540. We continue to communicate with them and work with them on looking at that. What we have done though is, and in our conversations, is that the priority level expenditure of the administration has been reflected in the current allotment release that have been authorized for the expenditure of the appropriation levels based upon $540 million for this fiscal year. So what they have done is, throughout the fiscal year, they have made corresponding reductions in what was authorized in Public Law 30-55 to reflect the reduced revenue collections of this fiscal year. And we have, from a starting point, looked at those priorities, and in developing the spending plan for the FY 2011 budget, gone off the baseline, you might want to say, baseline expenditure level of the Government of Guam that have been reduced and revised in this fiscal year from the original 540 when the revenues were short. In addition, of course, as everyone knows, the biggest additional requirement in the government resources this fiscal year has been, that is not in this fiscal year, that will be added to next fiscal year, is the additional debt service. So any growth in the revenue from our current collection rate, not our current authorized level of 540, but our current collection rate and expenditure plan, any additional revenue must first go towards the additional debt service that this government has in fiscal year 2011. And those two are, of course, the deficit reduction bond, which paid over $100 million in income tax refunds and $90 million in COLA settlement awards. That additional debt service, the first payment is due in fiscal year 2011, and that amounts to about $23 million. In addition, of course, we have the requirement for our first debt service payment also on the landfill bond, which totals right around $7 million. So right off the bat, there's an additional obligation by the general fund of $30 million over and above revenue requirements for FY 2010. So that is the general overview of what we've been doing, trying to close the revenue gap, trying to close the expenditure gap between this fiscal year and the upcoming 2011 fiscal year, as will be required to prioritize and support in the passage of the Appropriations Act for fiscal year 2011. At this time, I'll go ahead and like to ask the Director of the Office of Finance and Budget, Mr. Chris Badassi, to walk us through the economic data that we looked at, examining this year's fiscal, financial and fiscal condition of the government, and then of course using that information plus other historical data for projecting forth what we would realize in revenues available to support the operations of the government in fiscal year 2011. So Mr. Badassi.
Thank you, Mr. Chairman.
Before I do that, I'm sorry, my bad here, you might want to say. I do want to thank, of course, the Office of the Finance and Budget for their work, excellent work, I might add, in the development of this year's financial analysis and revenue projections. So Mr. Chris Budassi is the director. I also want to recognize and welcome to the body here Mr. Edison Manalato, who is a staff member of the Office of Finance and Budget, and we are very, very fortunate to have his services. He is a product of our local university. He has a bachelor's and a master's degree in finance and accounting. He is also a certified public accountant. He has 4 or 5 other certifications that if I say, you won't believe, because he looks like he just graduated from high school. But we are fortunate. He's been an auditor with Deloitte & Touche. Again, we have the benefit of his expertise in these areas of auditing, finance, that have clearly been invaluable in ensuring that the decisions and the policies we're looking at will in fact conform to the generally accepted accounting principles of revenues, accounting for the operations and expenditure of funds within the government of Guam. So I want to thank him and welcome him aboard. And then, of course, I have the Chief of Staff of the Committee on Appropriations, Ms. Lisa Cipollone, with us this afternoon also. And we have the other hardworking staff back at the office that are still continually looking over and churning these numbers. So thank you very much, and Mr. Budassi.
Thank you, Mr. Chairman. Madam Speaker, Vice Speaker, Senators, thank you for allowing me this opportunity to come before you today and talk about the revenues for fiscal year 2011. I'd like to take an opportunity also to thank the OFB team for all the hard work that they put forward on this budget bill and this presentation, also the Special Accounting Service and the Special Economic Service, who were instrumental in helping us kind of get through this with the findings in the latest audit. And I'll get into that more in the presentation, but it was difficult getting to this point because of what happened with the audit, and we're here today, and I'm happy to present this to you. So just a brief rundown on the table of contents. First, we'll recap 2010, talk about what happened, where we went wrong with the projections. We're going to talk about the Make Work Pay credit. Also, overview on the Guam economy, the economic outlook, the forecasting model for FY11, finding the baseline, prevailing economic variables, and then reconciliation of tax credits. And then we'll cap things off with talk about IRS tax code and changes that might occur in 2011, income tax provision, and then the general fund projection and special fund increases. Okay. So looking back at 2010, when we went back and looked over what had happened with the revenue projections, it looks like we're going to end about 13% off of the original projection. So we went in and we tried to figure out what was the component of that. And the first most obvious component was the military buildup. When we came out with the projections last year, there was anticipation that the record of decision would come down in January and the military activity would start. Obviously, when the DEIS came out and there were several deficiencies in it, things got pushed back, which in effect pretty much took away all of the economic growth that we thought we would see from the military buildup. That accounted for about 48% of the miss in the revenue projections. Now, the other part, what you see there, the Make Work Pay credit adjustment for FY09 and the Make Work Pay credit adjustment for FY10, has to do with the fact that when we were building up these revenue projections, the tax credit from the ARA, American Recovery and Reinvestment Act, Make Work Pay, is a tax credit given to taxpayers, and we were being reimbursed for it in advance. And one of the problems that occurred because of this is that the Department of Administration was posting this as revenue, as withholding revenue, and really it wasn't. And I'll move forward and get into that a little bit. Next slide. So the variance, excluding the Make Work Pay adjustment, was about 6% against the projections. That was the military buildup not occurring, accounted for about 6% of the 13. The remaining was the Make Work Pay, and when you combine the two, it was the 13%. Now, as I was mentioning, the OFB used incorrect revenue assumptions about the Make Work Pay and that was due to the administration recording advance payments as withholding tax revenue. So when we built our base and we used the FY09, there was a little bit of the revenues that we were given in advance for the Make Work Pay credit in the baseline, and that was that first part that I showed, I believe was about 10%. The remaining was all of the Make Work Pay revenues that were received this year that were also factored into the projection. And again, I'll get into why that we can't call that revenue, and that's why you see this huge gap of $60 million off of the original projections. Make Work Pay credit is a provision in the economic stimulus bill era, and it affords individuals up to $400 and $800 tax credit when they file their taxes. Next slide. The timeline on it, in April 2009, withholding tax tables were modified, and basically they were reduced, and what it allowed was more take-home pay for workers. That reduction in the withholding tables ended up being a reduction in the withholding revenues to the government of Guam. In June of 2009, the U.S. Treasury accepted the Department of Revenue and Taxation's plan to reimburse for the Make Work Pay credit, and that basically came out to be that we would be reimbursed $36.3 million per year for this credit. And that part of this credit is it's considered a pass-through to all qualified taxpayers. So in some cases it can be revenue, in some cases it's not, and I'm going to go into that on the next slide. So in July 5th, 2009, Government of Guam received $16.2 million from the Treasury, and it was recorded as withholding revenue. In June 30, the government-wide financial audit came out of 2010, and it contained a reversal of that $16.2 million that was listed as withholding revenue made on July 5th, 2009. And then through June of this year, 2010, the Government of Guam received an additional payment from the Treasury, and it was also recorded as withholding revenue. And that came out to be about $20.1 million. And then in July of this year, that was reversed out of the monthly revenue projection. So what we saw was a $20 million drop in revenues overnight when that was reversed out because of this audit finding from FY 2009. So immediately we started meeting with the administration, try to understand what was going on. This is a fairly complicated thing in the aspect that it's an advance payment for a tax credit, and it's pretty unique. Usually we submit for reimbursement, like the additional child tax credit, but in this case, I think what ended up happening was we had negotiated this advance payment to make up for the withholding revenues, so the tax base wouldn't suffer. And as a result, I'm not sure what happened with the administration, but it was considered withholding revenue, and it can't be considered revenue until the credit is given and it's determined whether or not it's a payment to the government or not. Next slide. So this is the estimated era Make Work Pay impact to the withholding tax. And long story short, in FY 2009, our withholding was reduced approximately $13.5 million. And in FY10, it was reduced by about 16.5. These are estimates. They're based on assumptions, but we believe that they're pretty close. So that was a reduction to the revenue line in both fiscal years of those two amounts. So what kind of impact did that have on the budget? First, we don't know how much revenue should be recorded for this credit. That's the most troubling thing right now, is we just don't know how much of it should be considered revenue or how much of it should be considered a pass-through to the taxpayers. These are the scenarios of what determines if it's a revenue or not. First scenario is that taxpayer claims the Make Work Pay tax credit and pays any amount of income tax to the government of Guam. If that scenario happens, then it's considered revenue to the government of Guam. The second scenario, taxpayer claims the credit, their gross liability to the government is equal to or less than the Make Work Pay credit. In that scenario, it would also be considered revenue to the government of Guam. The last scenario is the taxpayer claims the credit and is owed more than the credit. So if I filed for this credit, I received a refund of $1,000 inclusive of the credit, it would not be considered revenue to the government of Guam. And so what's making us unable to determine the amount of revenue from this credit in fiscal year 2009 and also in 2010 is that the tax refunds haven't been processed. So at the time of when this had occurred, there was only about 10% of the 2009 tax refunds processed. So there was no way for us to know, did we receive 10 million in revenue for this? Did we receive 15 million, 20 million, or is it 10 or not? So next slide, please. This is kind of a visual of the Make Work Pay tax credit and the impact it had on the budget. What you can see here is the blue line is the plot of the employment on Guam. It's a nice upward trend. And correspondingly, you would think that the withholding revenues would also follow that same upward trend. But you can see it kind of starts going up in FY 2008, and then you see it drop like a rock down to 155. So even though employment's rising, you see that our withholding collections went down. And then same thing in FY10, even though we've had employment growth and you see the increase in the withholding year over year, still it's a huge gap between where we should be. And what this represents here, the dotted line represents where our withholding would have been had this credit not occurred. And so you can see where the big huge gap is with the revenue projections and with what's occurring today. Okay, next slide. Next slide, I'm going to start to get into the Guam economy a little bit. And this is basically a press release that was done by the Bureau of Economic Analysis on their GDP data that they released earlier this year. This data was really critical in our analysis. It really helped us pull together all the different data that's available to us here to really understand what makes our economy go and what makes it ebb and flow and make it improve and also not improve. So this report was done cooperatively with the Bureau of Statistics and Plans and the Guam Department of Labor. Next slide. So using that report and then tying together all these other things, what we found was from 2000 to 2009, increasing employment, increasing wages. So again, we should see a really strong tax base and strong growth, but we haven't seen it. We haven't seen it in these years here. Next slide. This is a similar report done locally, but it's the quarterly employment report. And you can see the seasonality. In the summer of every year, you see a big drop, and then when school starts again, you see a big increase. The noteworthy thing on this slide is that in the seasonality in 2010, it was much less than in previous years. So that was a good sign that even in today's environment, we're not seeing a lot of jobs lost. Next slide. This slide plots the H-2B monthly workforce on average by fiscal year. It's a really good slide to look at. Back to 1995, you can see that the average workforce was about 2,800, and then it slowly drops and drops, and then it totally bottoms out right after 9/11 in 2002. And then it starts to pick up again in 2003, a little bit more in 2004, and then you see it shoot up in 2006. Okay, next slide. Another big component, obviously, of our island is the visitor industry. This slide shows back to 2003, where we had the lowest visitor arrivals in over a decade at 800,000. And then we saw a dramatic increase in 2004, pretty steady all the way to 2008, and then we had a big drop again in 2009. And then we've picked up nicely since 2009, and this year we're doing better as well. Next slide. So this slide is the same data, but it's plotted by month, and the lines represent fiscal years 2003, 2008, 2009, and 2010. The reason I wanted to show this slide is because it makes it really clear that in 2003, when we had 800,000 visitors, you can see the things that had occurred that caused that. In 2003, we had a typhoon, and visitor arrivals dropped dramatically, and then a few months later, when things started to get better, that's when the Iraq War started. And of course, we know that people don't usually travel on vacations when war breaks out traditionally. And so you can see how there's a nice pattern to the monthly visitor arrivals, except for that year when those two events happened. And then last year, we saw that bottom out to about 1 million visitors, and that was as a result of the H1N1 strain. And so we've recovered nicely from that. Next slide shows the federal grant expenditures by fiscal year. This one is a good slide to look at as well. You can see in 2003 things shot up quite a bit, and that was, of course, the post-typhoon recovery, the FEMA money that came to the island. And then you see things kind of drop down in 2004, and then they spike back up in 2005. The data in 2005 that causes that spike upward was a couple large transportation grants, about $66 million that we realized in those in that fiscal year. Then it came back to the normal level of about $200 million, shot back up in 2008. Again, that was Department of Transportation. We got some more large grants from them. And then, of course, ERA started to kick in 2009, and that's why you see it kind of starting to go up again. 2010, the data is not complete. That's why you see it going down, but guarantee that this 2010 line will be up higher than 2009 after the ERA money starts to hit. This graph is military construction on Guam by fiscal year. The blue line represents the appropriation levels given to the Department of Defense for military construction on Guam. The red line represents the expenditure levels, and it plots it all the way back to 2002. And you can see, if you remember looking at the H-2B data, in 2002, 2003, it was really low. It bottomed out completely, and then you started to see it kind of gradually pick up, and then you saw it spike up. And if you kind of follow the way this chart goes, you can see this gap, and you can see where in 2004, 2005, 2006, the gap is closed between the blue line and the red line. And that's because these projects have a lag time to them. They usually last between 12 and 36 months, and sometimes they take up to 6 months to get going. And so what ended up happening is we had these larger appropriations from Department of Defense, $82 million in 2005, $128 million in 2006, $200 million in 2007. Those projects were in the queue and started to pick up in fiscal years 2007, 2008. And that's where you start to really see it reflected in our tax collections. And you'll see that in a few more slides. But the key thing here is you can see the lag time, and then you can see what's coming ahead. Next slide. This is military expenditures on Guam, excluding construction. So these would be all the operations of the military bases. This would be the DZSP contract, other contracts to support the bases here. You can see again in 2003 the typhoon kind of spiked everything up higher, and then it kind of drifted back down in 2006, and then that's when the bilateral agreement between the United States and Japan to relocate the base to Guam occurred, and then you can see it gradually pick up to the levels in 2008 of almost $400 million. Slide. This last slide is a really good slide, and you'll see how it also relates to the revenues that we collect. This is Guam real estate sales. You can see that our baseline revenues look between 200 and 300 million roughly, and then you see this huge spike in 2006, 7, and then kind of peaking in 7 and dropping back down 8 and 9. And so what you see here is in the 2006, the speculation started to occur, and you see, and that's when all the hotel properties started changing hands. I think we had 6 or 7 hotel properties that changed hands, several pretty large businesses also. And what you ended up seeing was a lot of corporate capital gains tax in the subsequent years after this activity. Next slide. So that was kind of an overview of how the economy here kind of flows, the ebbs and flows between the military investment, the tourism, which of course is all driven, all the growth that we see is driven by the jobs created by all these things. So what we did in June is we convened the SAS meeting. We asked Gary Hiles, Chief Economist, Department of Labor, to come and kind of give us an update. He's also a sitting member of the Special Economic Service. When he came and talked to us, he basically said payroll is up about 5%, primarily due to increments of the minimum wage and also the H2 prevailing wages that become effective upon the renewal of the worker. So those are starting to go up as the workers renew. He also mentioned Q3 current employment report was up seasonally 3.2%, and the average through 3 quarters was up about 1.4% over the previous year. At the same meeting, we asked Debbie Phillips to join us and give us an update on tourism. She talked to us about visitor arrivals and where they were trending, again, higher than the previous year, maybe not too much, but still positive, which is a good thing. She talked about the additional flights that were coming in from Jin Air and the Haneda charters. She also discussed the rapid growth in the Korean market, and most importantly, the seat capacity from Japan was up 11% over the previous year, and I think that was a very telling thing about where tourism is heading. And then the trend is steady, and it's always good to hear that the trend is steady in tourism. July preliminary results, visitor arrivals were up 9.7% over the previous year. So I wanted to bring this slide back up because as we talk about where we're heading, I wanted to kind of set the stage for what this slide would have looked like a few years ago. Go ahead, next slide. So if we would have looked at this slide back in 2006, 2007, you would have probably seen a gap like this in the appropriation, between the appropriations and the expenditures. And then what ended up happening was, as those projects came online, all of that economic activity started to happen in our economy, which drove all the tax revenues that we received in 2007, 2008. Next slide. And again, you see the lag time here, where those appropriations started to happen and those projects started to come online, and then you see the shoot up of the H-2B workers that was following those projects as they came online. This slide is up here just to kind of give an idea of what's happening with the military buildup at this point. This is just activity from NAVFAC for 2010. This doesn't include Anderson Air Force Base. There's about 7 fairly large projects currently in progress, I think 4 of which DCK, local company, is involved in. There's also the huge $4 billion IDIQ contract that went out to several large multinationals and some local companies that had joined up with them. And so I think that in and of itself is telling of where things are heading. And the other notable thing on here is the 6 firms in October this year were selected for another similar contract of over $100 million. So what does that mean for the H-2 workers beyond FY 2010? You know, right now we've got about 1,922 workers on Guam as of June. With the passage of the Consolidated National Resources Act of 2008, it excluded Guam and the CNMI from a cap on non-immigrant workers from 2009 to 2014. And based on the activity, should the record of decision come down this month, which by all indications it will, after the final EIS was released, we expect the number of H-2s in 2011 to double from current levels. Next, I'm going to just briefly go through the model that we use to forecast the revenues. It's similar to last year with some modifications. Usually we'll complete the most up-to-date FY10 forecast. We'll usually do a 9+3 forecast or a 10+2. We had a little bit of a problem this year because of the make work pay. So we know that there's job growth. We know that the revenues for withholding should have been going up had it not been for this tax credit. But we've got these accounting issues. And so what we decided to do this year was to basically throw out FY 2010, because until the dust clears on what's going to happen, what's revenues and what's not on this make work pay tax credit, we didn't feel it'd be appropriate to include that in any of the analysis going forward. So what we did is we looked at trends between 3, 5, and 7 years. We did it with and without 2010, trying to gauge where 2010 might end. And then we came up with our baseline. And from the baseline, we add the other data points. Section 30 is a firm number. We make that request, and that's what we're going to get for that fiscal year. So there's really no need to forecast that. And then there's the other revenues, which are department charges, license fees, permits, use tax, other smaller revenue streams. And then from there, we add the prevailing economic variables, which would be things like military construction, tourism, which I'll go over in a few slides. And we apply the provision for refunds and the appropriations cap. And from that, we'll end up with our final revenue projections for the general fund for FY11. So some assumptions and challenges. It's always challenging on the fiscal multipliers here, and that's primarily because of Guam is an import-based economy. It's a closed economy. We don't manufacture a lot of things. So most of the dollars that we spend for things that to live our lives, a lot of that goes off island and it doesn't stay here and circulate. And so we have to use kind of a modified fiscal multiplier, which I'll explain later. The availability and timeliness and accuracy of data is always a challenge. I think we've built a nice database of information that's really helped us kind of track where things are heading. And we've also had some cooperation from the Department of Revenue and Tax, which was instrumental in us understanding the provisions and getting some more information that we needed to finish the revenue forecast. The other thing is these tax credit reimbursements. Obviously, these are a challenge, one, to administer, and two, they're a challenge from a policymaking perspective because it kind of takes away from being able to understand and know where your revenues are coming from. And most of these things happen after our budget gets passed. So Congress will decide whether they're going to extend ERA in October, and they'll also talk and probably decide whether they're going to extend the Bush tax cuts long after our budget is passed. And so those things affect our revenue stream and make it really difficult to make a projection with a lot of certainty of where our revenues might end. So our PV approach for 2011, we wanted to go with our best assumptions, the things that we know, and I think the two most important milestones is that the final environmental impact statement was released and the record of decision is due this month before the end of August. Those two things I think are going to unleash quite a bit of activity in the upcoming fiscal year. So uncertainty about the PV projections. Certainly the relocation of the Futenma Air Base, seemed to be a lot of tension on that issue. So that is always an uncertainty as far as what will happen. I don't think it will stop the construction activity that's already being planned and in the queue. It might have problems down the line though with that one. Prolonged build-up time frame, that's also uncertain at this point. And then the request from the United States for a lot more money for this build-up. Not sure how that will play out. Consequences of a PEV approach to forecasting revenues. If you're really aggressive, you can end up like this year with allotment controls, having to basically hold back from the appropriation levels that were set forth. A safe run at the PEVs would limit your growth to operations. So there's certain areas in regulation and other things that we need to actually beef up in anticipation of this build-up. Taking a safe approach kind of limits your options with that. And then, of course, the other challenges that the chairman talked about with the debt service and the other additional expenses that have come online in this budget. And then an ultra-conservative approach would end up at this point in reduced services and operations. And I don't think that anybody wants to see that. Next slide, please. So here's a rundown of the general fund revenue projection. When we put together our net income tax base, it came out to $251 million. Gross receipts tax was $184 million for a total tax revenue base of $435. Then we add in the other sources, the Section 30, add back the baseline provision, which is the provision for refunds for those years that we included in the baseline. We get gross general fund collections of $574. PEVs on top of that, tax credit reconciliations, and down the line. And I'll go through each one of these things. Next slide, please. So calculating the baseline. Because of the challenges involved with 2010, we had to try to figure out what is the most optimal way to figure out our baseline, since we can't really count on anything from the 2010. So we looked at 2007, 2008, and 2009, and we wanted to see how we could incorporate those into a baseline projection. So what we ended up doing is looking at those trends from those years and trying to figure out what's the probability of these same situations repeating themselves in the upcoming fiscal year, fiscal 11. And what we came up with was in fiscal 07, we weren't as robust as we are now. There wasn't the job growth that we're starting to see. But we think that there's some issues with 2008 and 2009, and I'll get into that. And you can see that right here in the base adjustment line. So when we set up our baseline, first we have to kind of comb through the data and say, does this make sense? Is this going to repeat itself in the upcoming fiscal year? And what we found was, if you go to the next slide, this is one of the things that created some tension with using those baseline projections. And so we don't think that this will occur again in the upcoming fiscal year. So we had to kind of make some adjustments to smooth that out. And if you go back one slide, you can see we made those adjustments here. So we think that corporate income tax needed a $4 billion reduction down, and corporate income tax for 2008 was reduced by $13 million. So we think that kind of smooths out where those numbers will come in the upcoming fiscal year. And then, of course, in 2009, there was two huge adjustments. One was for ERA make work pay that was discussed earlier when the auditors reduced that by $16.2 million. There was also a $5.8 million additional child tax credit reversal. And the last one is the COLA withholding. So the COLA withholding was one thing that we had to take out of FY 2009 because that scenario won't repeat itself in the upcoming fiscal year. That was a one-time deal. It was $9 million in withholding that we collected. So after removing all those things, we get a baseline of 233 for 09, 255 for 8, and 233 for 7. And so going back to all those charts we looked at and where things are heading, we really believe that FY 2008 is what it's going to look like in the upcoming fiscal year. We think that we're going to see the job growth that's going to generate from the buildup. And therefore, we weighted that year 80%. And the other years, we went with a 5% and a 15% weighting. Taking all of those into account, we get our baseline of 251.13. Next slide. So going back to this slide, the gross receipts tax 3-year trend is about 184. And that was one of the reasons we weighted 2007 kind of low, because our GRT collections in those years were much lower than 2008, 2009. If you look, GRT is a consistent thing, so we are confident in the GRT numbers for fiscal 10. So if you look at fiscal 8, 9, and 10, we get a average revenue in that category of 184 million. So that's what makes up our total tax revenue baseline. And then the other sources are pretty consistent. They're kind of like the special funds. You don't see huge amounts of growth from them. It's car registrations and things of that nature. Those are tracking right about where they've been for the last 3 years. The Section 30 requests came in at 48 million this year. That includes immigration fees. We're actually supposed to get 52 million from Section 30, but we're in our second year of a reduction to the Section 30 due to overestimates in previous years. Adding back the provision, again, we get the 574 and then the PEVs. Next slide. So what make up our prevailing economic variables? First and foremost is construction, and we broke it down by military, and we used the term direct and indirect. It was used quite a bit in the EIS. Government of Guam construction, private sector. Then we looked at military operations, direct and indirect. Income tax growth from the baseline. ERA, non-construction activity. The ERA construction activity is actually up in the Government of Guam, category B. And then tourism. Next slide. This is an important part of what we do with our prevailing economic variables. This is what we call the 10% net tax effect. And through time, we've looked at the different revenue sources and what we think the right GDP numbers are. And through the help with the Department of Revenue and Tax, it's always been considered that we collect about a dime out of every new dollar that generates in the economy. And you can see that we tested it against the GDP data from the Bureau of Economic Analysis. And we came out with rates from general fund collections of 11% in 2003 and 4, 9% and 5, and then 10 and 11% in 6 and 7. 5-year average of about 10.69% of GDP. Now for our PV model, we used 10.37. We adjusted a little bit for some of the baseline activity, and it came down off of the 5-year average. And how does that fit into how we calculate the revenues we'll receive from the PEVs? This example here is the military construction calculation. Looking at the baseline activity from military construction, we look at each project that's been appropriated for, where they're at in the construction of it. Has it started? Has it been awarded? Is it in progress? Is it going to be complete? We chart all those things out, and then we come up with a baseline average per fiscal year of how much construction actually occurred during the fiscal years. We had a 3-year average from current period of 155 million. And in FY 2011, we think there's going to be about $420 million worth of economic activity related to the buildup. These numbers were confirmed in several different cases. They were confirmed in the final EIS that they believe it'll be around 400 million of activity this year. I also heard several JIGPO people mentioning that in various media accounts. So taking the FY 2011 projection of how much construction we think will occur in the military, reducing that from the 3-year average, we come up with an additional $268 million worth of activity on top of the base. And so those are the new dollars that are going to start to turn in the economy. And then you see this category called weight of spend, and this is what I had mentioned earlier when we have to make an adjustment to the fiscal multipliers. So because of our economy being the way it is, being closed and an import based, we think that only about 50% of that money is actually going to stay here and turn through the economy, and most of that is obviously in the labor costs. So we apply the adjustment down for all that money for those projects, and we come up with $136 million of new dollars turning in the economy in fiscal 2011 from military construction. We use a multiplier of 1.59. It's going to turn through the economy based on that. Total impact of gross domestic product of $216 million. Applying the 10% net tax effect, that's going to generate an additional $22 million for the economy in fiscal 11, approximately. So these are the projected expenditures based on the same concept of what we just looked at. So what we did is we came up with the scenarios of how much new money was going to start to turn in the economy, figured out what the weight of that would be, and then applied the multipliers and ran it through with the 10%. And what we came up with was the projected expenditures above the baseline. We talked about the 136 for the MILCON, 74 million for the government of Guam construction projects. This would be LEDZON, GPA activity, GWA is coming online. Airport always has construction going on. The port is in line for quite a bit of activity. And lastly, the JFK project will hopefully get online and happen this year as well. Now, commercial development, we were really conservative on this one for a couple reasons. One, it's really hard to peg. You can't really tell what's going on out there. It's hard to keep up with. So we kept it pretty low. The 18.5 million of activity comes out to about an additional $3 million of a PEV. I mean, the Unix Ukadu Workforce Village alone is a $123 million project, not really factored into our PEVs at this point. Individual income tax. The reason that we use a PEV on individual income tax this year is because individual income tax is kind of a lagging thing. So because of the job growth we've seen over the last couple of years, we believe that individual income tax will go up by about 2.87% based on those average wage and average employment numbers that had been going up over the last few years. Then there's the ERA non-construction activity. This would be all your federal grants, public assistance, that kind of money that starts to turn in the economy. Net's about $3 million in tax revenues from the 23. And then tourism. For tourism, what we did is we relied on GVB's report to the legislature from July of this year. They're projecting a modest increase in arrivals for the upcoming year, and then they projected a pretty drastic increase in the spend of the visitor arrival. We didn't use their number. We stayed off of it a little bit. We didn't think it would be as high as what they were projecting, and it came out to an additional $57 million, or turning that over, it'd be about $7 million in additional tax revenue. And this is basically the summary. So your military construction was broken out between construction and base activity, and the remaining items we just talked about: government of Guam, income tax, ERA, and tourism. Total $53,037,000 of additional revenues from all this activity. Now I'm going to talk a little bit about the additional child tax credit reimbursement process. This is a tax credit that individuals claim on their tax return. The process for us getting reimbursed for this tax credit comes when we pay the refund out, or we pay the credit out. So for our purposes, that would be an A status return that's sitting in pen waiting to be paid the refund. When the provision money is transferred to the income tax trust account, the refund's paid. At that point, Revenue and Taxation on a quarterly basis tallies up all the people that took that credit, submits it to Treasury, and then we receive a prompt reimbursement for that. Part of the problem with this one is that we're kind of missing out on a lot of revenues because we're delaying the processing of the income tax. And so what we want to try to do, and you'll see it in the Budget Act, is we want to try to promote getting those things processed so we can get the refunds out and get the money back to Guam as quickly as possible. So there's really a lot of effort that went into trying to come up with ways to make this happen in an efficient way, where we can get that money on Guam and get it circulating quicker, because it's an opportunity cost. If we're not going to get that money back here because we have refunds sitting there not being processed, it's really to our own detriment in the economy. And this is the data for the additional child tax credit. You can see in 2002, 2003, 2004, the number of people that took that credit increased, and you can see that the actual amount of the credit was up and down. But look at the numbers from 2008, 2009. So those aren't necessarily the amount of people that took the credit in those years. Those are tax refunds going out for fiscals 4, 5, 6, 7, 8, and then us submitting for reimbursement. So it kind of shows how, this year we got approximately $13, $14 million in reimbursements for that. So if we can ramp that up and get that prioritized and get those things processed, we can probably realize quite a bit more revenue in the upcoming fiscal year. Other notables, HR 3118, Making Work Pay Tax Credit Extension. We talked a little bit about this earlier. ERA Make Work Pay expires on December 31st, 2010. President Obama is trying to extend that in his 2011 budget. If it's extended, will Guam continue to receive the advance reimbursement of the credit? I think it's unknown at this point. We've received it for 2 years, and at this point we haven't reconciled tax year 2009. And so will Treasury continue to give us that advance payment? I'm not sure. However it goes, if the tax credit continues and we do continue to get the tax advance payment, we'll have that for fiscal 11. If it expires, then we should see an increase in withholding of about $16.5 million, which is not currently in this budget. Next slide. 2001, 2003 Bush income tax cuts. Those are also set to expire at the end of 2010. You can see across where they were pre-tax cuts and where they were post, and then the variance below that. Now, there's a lot of pressure on Congress to extend these and make them permanent for all categories. I'm not sure where this will end up. President Obama's budget proposal is to make the 10, 25, and 28 rates permanent and let the others expire, except for the 28, who would also have limited itemized deductions. Next slide. Right now, we estimate that Bush tax cuts probably cost us about $3.9 million a year. Over the last 4-year period, that would account for about $15.6 million. So long-term consequences, if the tax cuts are permanent, pretty much watch that revenue never come back. If they're extended, we're going to have to forego it. If they expire, that would be good. Then we should see some additional revenues in the upcoming fiscal year. Start to talk a little bit about the provision for tax refunds, what that is. It's the inventory of all the tax refunds owed for corporate and individual income taxes. These are estimates by the Department of Revenue and Taxation for payment of tax refunds during the tax years during the current fiscal year. And it gets a little bit confusing because we have 2 tax years crossing our fiscal year. We've got the last quarter of the previous tax year, and then we've got 3 quarters of the upcoming tax year. So it's a little bit of a hard thing for them to work with, but they do it, and that's how they do it. This next slide shows the income tax refund payments compared to the general fund annual provision for refund budget. And what this slide shows, this excludes all bond proceeds related refund payments. It excludes the IRS rebates, things of that nature. This is strictly general fund cash going out in refunds on an annual basis, and this is from the Department of Administration reconciliation report. So you can see the difference. The green line, or the green bar, represents the provision, the actual provision from the budget. The red line represents the amount of tax refunds we paid from general fund sources during those years. So you can see we're up and down, and it's been a tough road. Okay, next. So where are we at? So in fiscal 2011, total general fund revenues from a gross perspective are going to be $646 million, taking out the provision, and the 2% general fund reserve nets us down to the 533 that was discussed earlier. And just a couple notes on special funds. Again, we believe that they generally track along the BBMR method, which is based on rolling averages. These specific funds were increased considerably year over year, and I'll talk a little bit about each one and why. Solid Waste Operations Fund, at the end of September, GBB has to submit to the PUC their recommended rate increases for the solid waste system. Last I checked, it was about 155 per ton for the commercial and about 29 or 30 for residential. The breakdown, they were estimating about $22 million revenue stream from those rates, and that was excluding the military as a customer. Of that, about 15 million would be from commercial, about 5 from residential. For the purposes of the budget, we only budgeted for operations and the debt service. So you'll see that we only brought the number to 13, even though they're projecting about 22 million in revenues from that fund. And that's because there's a lot of other things that they're reserving that money for, future cell development, landfill closure costs, things of that nature. Okay. Healthy Futures Fund, there was policy enacted this year, caused the Healthy Futures Fund to skyrocket. Originally, the estimates from BBMR were about $11 million. After looking at the trends from the third quarter of this year, which is the first quarter from which that tax took effect, or that tax increase, we saw an 80% increase in that quarter when we combined the months. And we believe that that trend is good, considering that the increase was 200%. We think that we're going to realize at least the 80% increase year over year. So the projection for Healthy Futures went from 11 million up to $20 million this year. And the last is the Manpower Development Fund. We talked about this earlier. We think that the number of people or H2s on the island are going to double in the next fiscal year, and so effectively that translates to almost a double of the fund itself. On August 9th, a modified briefer version of this presentation was given to the Special Accounting Service. They gave us several different points, technical feedback on things. We did take that into account. We ended up reducing our estimates on the TEF and a few other things. We had some discussions about the FY2011 military appropriations and would they affect the economy this year. In general, the SAS was positive given the presentation. Last slide is the SES feedback. So the results from that meeting with the Special Accounting Service were then presented to the Special Economic Service. The policy group in general had no objections to the revenues presented. Positive feedback about a lower projection. And then also some members had mentioned they were very comfortable with the numbers presented at that meeting.
Thank you very much, Mr. Badassi. That is probably a lot more than you want to know with regards to the details and the nuts and bolts of what drives our economy here on Guam. Once again, the Committee on Appropriations, in looking at how to allocate for and meet the needs of the requests by the departments and agencies of the government of Guam, looked at the original revenue projection, the revised revenue projection, the SES revenue projection, and for the purpose of, we're not ultra conservative, but we are a little bit more conservative in that we accepted the $235 million projection by the approved by SES or concurred by SES on the presentation made by the Office of Finance and Budget. That concludes the presentation by Mr. Badassi, the Office of Finance and Budget. We'll now proceed to some general discussion and general comments on the bill. Okay.
Chairman, can we get a hard copy of that presentation? Thank you.
Yes. It's all, again, just for the note, it is posted on the website, on the office. www.senbenp.com benp.com/OFB. And that will be on there. But we will provide members who wish to receive a hard copy, let us know. Okay. I have Senator Uggan on senbenp. .com. Not at .com, just .com. Yeah, /OFB. It's not on? Yes. www. Okay. All right.
Buenas tardes, Mr. Speaker, dan si Dus masih po rin the presentation ginin hagod sa katodas ginin as Mr. Badasi. I just wanted to make a couple of initial observations, Mr. Speaker, just based on looking at preliminarily at the numbers and taking a look at what the committee has done or has presented to the main body in regards to this overall budget presentation. I think that there are certain things that need to be highlighted, and our people, inclusive of our public employees, certainly need to be able to recognize some of these major factors. First and foremost, looking at the budget projection, I consider this in the safe category. Not necessarily, Mr. Speaker, like you mentioned, in the ultra-conservative, but in the safe category in terms of the overall budgetary numbers being presented today. But when we look at what the legislative body did, and we were successful in floating in last year in July, a $400+ million bond, of which $200 million was allocated towards the Luzon landfill, and then also towards the closure of the ordered dump. $200 million was allocated towards operational expenses to include tax refunds. Well, apparently that's going to result in our first annualized debt service in fiscal year 11. So that, I believe, Mr. Speaker, if I'm not mistaken, that figure is about approximately $28 million.
About 23.
About $23 million in the next fiscal year.
Right.
So if we're looking at the projected revenue expense or budget revenues of 540, which was allocated in fiscal year 10, then we're looking at a $535 million budget projection, having to incorporate that $23 million annualized debt service. I think it certainly poses a tremendous challenge to this government and also to this body in terms of allocating the resources. I wanted to mention that, Mr. Speaker, only because I think we need to look at this budget from a particular perspective, and that's recognizing that debt service is a debt service. That will be taken off the top, regardless as to how this budget is allocated. And then, in conjunction with that, looking at some of the other factors, and I'm not going to go into any additional details that I'm sure that you're going to be discussing as we go page by page, but looking at that, taking into consideration the tremendous consideration in terms of making sure that healthcare, education, and public safety receives sufficient resources in fiscal year 11 so that they can continue their operations, and matching that up against some of the additional external resources that are being received by this government. Very fortunate that ARA is, the federal government is infusing significant amounts of money through ARA funds. I believe just with DOE it's an additional $70 million, 60 to 70. UOG maybe in the neighborhood of about $14 million, and the GCC in the millions of dollars in terms of just education alone. And then looking at some of the other government of Guam agencies whereby we're going to be receiving some ARA funds. So we're very fortunate from that perspective in terms of some of these external resources. I believe that that's going to bridge the gap in fiscal year 11 so that the pain that would have otherwise been felt going into fiscal year 11 is not going to be as challenging as the presentation that I just presented to you in terms of the additional obligation of $23 million. I was looking also, Mr. Speaker, at the real estate presentation, and I believe that once the record of decision is released, hopefully it will be released only after additional consideration by concerns by this body as well as the people of Guam. But once that is released, which I know the anticipation is at the end of August, I don't know how that's going to play out, whether it be the end of the fiscal year, because obviously there has to be pre-obligations because of how the federal government works. Otherwise, there has to be a carryover provision of the allocation. But looking at the real estate, I noticed that in 2007, that figure was recognized of $687 million, dropped to $365 million in terms of investment, actual investment in purchasing and exchanging of title of property. And then in 2009 was $251 million. And I believe that just by virtue of that ROD being extended and being released, that certainly that may result in perhaps just slightly higher numbers in terms of the real estate transactions that would take place in fiscal year 2011. But just looking at the overall presentation, Mr. Speaker and Mr. Badasi, thank you very much. I certainly appreciate and I understand the conservative nature, safe/conservative nature in the presentation of the numbers. And also, I think it'll be a very good and lively discussion in terms of how we proceed in discussing this budget and the allocation of the proceeds, recognizing that there are a number of factors that have been considered by virtue of the presentation, and there are a number of factors that will be considered as we proceed during the course of the fiscal year. So I thank you again for that presentation, and I particularly was interested in the circulation, the net tax effect. That figure I thought caught me not by surprise, but it's good to finally have a net tax effect figure for any outside resources that are coming to Guam, because we can take that percentage and just apply it in future deliberations. So thank you very much, Mr. Speaker, and Mr. Badasi.
Thank you very much, Senator Ruggan. Senator Calvo?
Yeah, thank you very much, Mr. Chair. Again, Mr. Bidasi, thank you so much for, again, your good presentation. Just on the Make Work tax credit, again, I had attended a couple of meetings earlier. I thought that Bertha had mentioned that when it comes to the Make Work tax credit, it had been already advanced to the local government. Is that correct?
That's correct. We got the cash payment.
There you go.
Right.
That was the issue on the revenues and cash, and where we differentiate the two.
That's right.
Now, again, it was taken, because it was given, it was taken as revenues, and now is the issue on the whether it can be taken as revenues, or is it done when it's filed by the taxpayer, either the $400 or the $800 credit. And of course, one of the issues I have now is on the cash side of things, because obviously it's a pass-through. These monies, the funds that were sent over to the local government, again, was deposited, and again, it was used. The issue now is that, and I guess this is a catch-22. If they are to claim it and claim the credit, then of course, again, what you're saying is it can be used as a revenue. The only issue now is the cash flow situation, where the cash had already been used because of a certain spending plan, or for paying bills or other areas. So that's just a concern I have, that it's a catch-22.
Yes.
And I know we're going to get to the spending plan later, but again, I will ask the chairman that it's important that we do get a formalized spending plan from the administration. And I want to congratulate you, because again, you are using in this substitute bill, again, from your discussions, how you've done this to keep it balanced is based on, again, what is the administration doing today to alleviate the shortfall, and they've done more of this across the board. I think it's a 3% holdback.
Reserve, yes.
Yeah, and obviously it's the most easiest way of doing things, and I know you're just implementing what you're seeing the administration is doing, but when it's done on a percentage basis, then of course the ones that are going to feel the pain the most are the biggest spenders, which of course is Department of Education, and then after that public health, and there will be some consequences. I think it's important as we move forward in this. I respect you, Mr. Chair, for again anticipating the administration on how they've done things, but I think it's important as we move forward in this process that the administration comes back to the committee with a formalized budget plan. Will it be across the board, or will we focus on what are their perceived priorities? Thank you very much, Mr. Chair.
Thank you very much. And just for the record, for the information, we began that on expenditure, that as a baseline of expenditures. But you will see in the committee report and in the budget bill that we have, in fact, in some agencies, gave them above what is the 3% cutbacks. Because so we've put back the 3 in some instances.
Okay, so you're not exactly in line with the administration. So this has been. Okay,
that
so
was like baseline.
Okay.
And then when, for example, when the community health center said, I have these ARA doctors who are going to expire under contract, and the ARA funds expired, I need more money for that than what was submitted and what has been released to me because
Yeah.
the ARA is not reflected in their local appropriation. We gave them money to keep those doctors online. So we did make some of those issues, and we noted that in the committee report and in the budget bill. You'll see like legislative intent in the budget bill on the sections for the different agencies.
Yeah.
And in those instances where we did that, you'll be able to see that.
Thank you, Mr. Chair, because that explains, I was just a little concerned because
Yes.
of the across-the-board cuts.
Right.
When you take 400,000 from the pharmaceutical fund at the hospital, or 5.2 million from the schools, Department of Education, or 150,000 from mental health,
Right.
that hold back by BBMR and this administration has had a chilling effect. And, that's why I want to thank you so much for, again, adjusting it. But again, I would like to see their formalized spending plan. Thank you very much, Mr. Chair.
Thank you very much, Senator. Senator Titlegy? I'm sorry, Senator Palacios, then Senator Titlegy.
Thank you. Thank you, Mr. Chairman. Mr. Chairman, the presentation is easy to follow and it's pretty informative. It's comprehensive, though. And so what remains now is that I'm prepared, of course, to share with the heads of the agencies to my oversight, advising them, of course, that the total amount reflected is pretty much final, and that I will suggest to them that if they wish to transfer a little amount from that item to the other item, that would be acceptable, as you say, as long as you don't alter the final. Is that okay?
Yes.
Okay, so I guess we can work on that then. Thank you for the presentation. I mean, it's very interesting, and it's easy to follow, and it's easy to understand. Thank you.
Thank you very much. Sometimes when it's a little too long, it's hard, but all it takes is some patience, and we try to work with that, and we thank you for your patience. Senator Titlegy.
Thank you, Mr. Chair, and thank you, Chris, for the presentation, and Edison, welcome. It's a great asset to OFB to have you on board as well. Mr. Chair, you sent a letter out a while ago to JIGPO requesting information, or basically to participate with the OFB in their projections with regards to the military buildup and the contracts that are awarded out from this buildup. I know that you have sent a letter there. I haven't seen other than they've assigned someone to your office to assist in that area, but what about the ability to enforce, with regards to awarding these contracts to receive the taxes collected from that huge amount? Have you been able to, in your projections, I guess the number that you presented us today could have been reflective of that, but I'm not quite sure, because how much have they really contributed to ensure that these contracts, that we get the taxes from those big contracts?
Right. Yeah, they have agreed to assign a liaison. Senator Cruz continues to work on getting our congresswoman to push the NAFAC to put a contract office here. All of these efforts, RevTax continues, and the administration continues to push those initiatives. So this is not reflective of any new enhanced efforts on collections and linking with them, but those enhanced efforts are happening, and we'll see hopefully some improvements in being able to monitor, collect what is owed to the people of Guam by these outside businesses who come to Guam as a result of the military expansion.
With regards to those 7 large contracts, based on your analysis on the NAFAC that it presented to you, the GRTs, did you reflect that in your projections, just on those 7 that was presented to us?
I'd have to go back and look and see if those were the ones that were actually factored in, but certainly if the contract was awarded, it was included. So those contracts, if they're in progress, are part of the military construction prevailing economic variable.
Okay. Do you see, Mr. Chair, an increase in revenues for tax collections coming soon with with the participation of JIGPO and you and having a liaison here office, I mean, what's your predicament as far as revenues increasing from that?
Yeah, if they cooperate fully, we will. You know, the military, there was a letter sent by the public auditor in which, while the military cooperates, their position is that, you know, they have no obligation to help us collect these taxes. And the decision may not be a technical one, it may have to be a political one, that they are obligated to help us. You know, and that'll have to come from our congresswoman and efforts, you know, by the new governor, I guess, in terms of how aggressively he wishes to pursue getting Congress and the administration to cooperate.
Well, Mr. Speaker, I commend your office for a well-informed presentation today, but it is very, very important and I think crucial in these revenue projections that the inclusion of these taxes be collected. I mean, if we're using any type of benefits for the, from this military buildup only to use that benefit to support the military buildup, then we get no benefit whatsoever.
Yeah.
So I'm hoping that the Congresswoman Madeline Berdayo will definitely know of this, and you can rest assured I'll be knocking on her door to ensure that DC knows our predicament with regards to this. Thank you.
Thank you very much. And Senator Respicio.
Thank you very much, Mr. Speaker, Mr. Chairman. Well, so far so good. And I'm confident that this process will continue to be anything but what you've already been able to present to us. I want to join our colleagues to express to you, Mr. Chairman, and to OFB the accolades that really so far so good. If you know, I just finished reading the fiscal year 2011, closing the fiscal gap. Excellent reading. It takes into account the structural deficit. It really has a very matter-of-fact presentation of how we got here. Doesn't point any fingers, doesn't cast any aspersions. And my point really, Mr. Speaker, is that this budget process has really been extremely depoliticized because we've taken the politics out of preparing the annual budgets for the government of Guam. And we have statutory requirements through the SAS and the SES. And what I've seen over the years, we know, is back in January of every year, the governor will submit a budget proposal to the legislature, and for some reason, those numbers are always higher, and for some reason, those numbers always match the exact expenditure requirement for that fiscal year. And then when the legislature, through the Office of Finance and Budget and through the Committee on Appropriation, reviews the revenue projections and comes up with its own numbers, every time there's a disparity and the revenue projections has to be revised downward. Some cases, the revenue projection is revised upwards, but then your revenue estimate always somehow matches the expenditure requirement. And in previous legislatures, regardless of what party held the majority, that's just what the challenge is every legislature was faced with. But the fact that there's statutory requirements that the legislature and OFB must work with the executive branch to have the classified employees come up with the revenue estimates really has gone a long way to making sure that we're budgeting responsibly. And I wanted, for the record, to commend you in providing for us a very matter-of-fact approach and to be very honest, open, and transparent, but more importantly, to be responsible in how you're presenting a budget proposal for fiscal year 2011. This report put out by the Office of Finance and Budget and yourself, titled Closing the Fiscal Gap, Mr. Speaker, it also takes into account what items were not funded. From the very beginning of the budget process, it also points out new discretionary and operational expenditures for FY2011. And if this body moves to fund those discretionary operational expenses, this report points out that the provision for tax refunds set aside may be affected. So I congratulate you in advance, and I'll congratulate you at the end, because I know that because we have a statutory process where the administration and the legislature must work together to provide a balanced budget for the government of Guam, removes the politics and the back and forth. I'm very confident and comfortable in what you've been able to present so far, and I congratulate you, Mr. Speaker, Mr. Chairman. I congratulate you, Mr. Bodassi. This is a very comprehensive, responsible approach, and I just look forward to the next challenge of this process, and that's the outlining the expenditures based on the adopted revenue level. But thank you, Mr. Chairman, for the opportunity to express my concerns, my comments with regard to how we're going to approach this budget process. Thank you.
Thank you very much. Senator Munya-Barnes?
Si Juas Masi, Mr. Speaker, Talawani Si Juas, I just want to share the same sentiments as the previous speaker and thank you for your leadership, but also to OLP, Chris and Edison for a job well done. And as I look at the presentation, I know that we did several tracking projections, and we had public hearings earlier, and I know that with this current update, you added several more documentation to justify the presentation that you had this afternoon. And I just think that when we have the collaboration of the SAS and the SES members, and maybe just for the record for our listening audience, so that you know that what our previous speaker from Aganya had said, where that collaboration was there, that maybe you can just for the record tell the listening audience what the SAS and the CES are, what members are they and where they come from.
Okay, sure. Mr. Badassi?
The Special Accounting Service is what you would typically call the technocrats in the government. It's made up of accountants from Department of Administration, people that work at the Bureau of Budget Management, some folks from Department of Revenue and Taxation, Bureau of Statistics and Plans, and we meet generally on a monthly basis to discuss various trends with the revenue collections, other things that go on in the economy, share information, things of that nature. The SES is a policy-driven group. It's composed of the public auditor, the director of the Department of Administration, Bureau of Budget, Revenue and Taxation, GITA administrator, chief economist from BSP, Department of Labor. And the group is to get together and kind of review the bigger policy issues. And I want to thank them as well for their participation this year. We had some really, really good discussions that I think will result in some positive things. We tried to incorporate some of them into the budget. You'll see that as we go through it.
Thank you. Thank you. And I really appreciate those comments so that our listening audience can understand how the work was being put together and how the government truly works with all the experts and the technocrats at hand. You know, as I looked over the presentation on the Healthy Futures Funds, and then we looked at the tracking of the GBB, the receiver for the landfill and the closing of the order dump, and I know that in recent talks they talked about the closure being at, or the tracking at the opening the new landfill was at $20 million less than what was actually projected. And also with the increase of the recent public law of 30-80 on the increase of the tobacco products, and you showing that there probably is from the executive budget projection 11.2, and then the executive projection from what you guys come together was almost a $9 million difference. My take was, is there any way that the reprogramming or structuring of looking at some of the deficiencies or the deficits coming through, or the shortfalls that are coming here, that there could be an integration to work it into what these deficits are? And I'm just, food for thought,
Sure.
asking where your opinion is on that.
Yeah. Well, one of the features of the increase in the tobacco tax that was part of the statute was that we actually allocated then a portion of the collections on the tax, pre-allocated them to different programs. So
that's already included
yes,
then?
it was
So
included in the
that $9
increase.
million is already included?
That's right. By statute, they were basically allocated to statutorily created obligations.
So then we know then the hospital is still going to see that realization of that shortfall at the 1.3 that we're looking at right now.
That's correct. The hospital, by statute, would get 10%? About 2.4 million additional money out of the Healthy Futures because of the increase.
But that's already included.
Yes,
in this
it's included in the.
What
in
about on the GBB receivership?
No. That remains under control of the. Yes, that's right. On top of that. So, okay. Any other general comments on the bill? Thank you. If not, we'll then proceed on a section-by-section discussion on the revenue side. I'd like the motion to accept the title, I guess. That's the first motion?
I'll make that motion.
Okay, thank you very much. Motion to approve the title. No objections. Section 1, General Provisions, Chapter 1, General Provisions, short title, approved. Section 2 is the estimated revenues for fiscal year 2011. The amounts reflected are under the general fund revenues. Senator Ogden.
Thank you very much, Mr. Speaker. I just have a quick question because there was a very interesting chart that was presented by Mr. Berdossi in regards to actual payments remitted. I noticed that in 2009 there was $75 or $86 million that was set aside, of which perhaps about $47 million was actually paid out. In 10, that actual payments remitted to our people in tax refunds went up to 84 or $87 million specifically because of that obligation bond, the general obligation bond proceeds that you were able to incorporate some of the proceeds from that bond to pay
Refunds?
For tax refunds.
No.
So, yes.
The 2010 payment is strictly from general fund collections. It does not include the $112 million from the bond. That is not part of that.
No, the 112 was for the COLA.
No.
But then, what, for the court settlement for the COLA payments?
That was 92 million.
Okay. But weren't there proceeds originating from the general obligation bond?
Yes.
That was remitted or set aside specifically for the payment of tax refunds?
Correct, there was.
And what was that figure?
In fiscal 2009, we paid out approximately $159 million in tax refunds. 112 of that came from the bond proceeds, and the other $47.5 million came from general fund.
In fiscal year 09?
Yes, 09.
I thought the bond was floated or received in July of last year. So it was all paid out in fiscal year 09.
Correct.
That's what you said.
That's correct.
That's where
it was paid out in July and August.
That's where the additional $8 million in the supposed projected revenues was incorporated into this fiscal year's budget.
That's
Correct.
Okay, thank you.
Okay. So on section 1, on the general revenues, the general fund revenue, $651,298,818. The provision for refund was through the calculation formula that is required by statute from the Department of Revenue and Tax, and they've adjusted this to reflect the additional child tax credit reimbursements and the EIC requirements under the court settlement. By the way, the good news is that this is the last fiscal year that we will have an obligation on the settlement on the EIC payment. We will retire that $72 million obligation this fiscal year on the EITC settlement. And we are paying the EITC as part of your regular tax refunds now, beginning actually since 2005. So the EITC refund is now embedded in the tax refund as it was in the past, and the court settlement amount will be fully retired this fiscal year. So that's what caused the provision for refund to actually be reduced from the original submittal of 115 million down to 110. So that leaves us a total operational available for 551, and the revenue sources from the 551 is outlined in 1A. Total income tax itself, which is corporate individual withholding, after removing the provision for refunds, would give us 291 million under general taxes. The GRT will increase, will see a slight increase of about 202 million to 202. And then we back out the pharmaceutical fund, which is our general fund support to the Guam Memorial Hospital for the purchase of medicine. Then we have included a reduction of about $3 million, and this is for the JFK lease that will be funded this fiscal year. Again, this was not part of the governor's submittal. We had to, when we talk about, you reserve, the governor did not reserve the JFK lease, but we felt that we're going to be there. The children need a place to go to school. We need to pay for it, so we put in a provision under the rebate program. And then the other taxes of about $3.3 million for total taxes of $485. Senator Aga.
Thank you very much, Mr. Speaker. Mr. Speaker, just so that perhaps representatives from GMHA don't jump the gun in terms of looking at the overall figures that's being allocated under the pharmaceutical funds. In this case, $8 million will be allocated directly to GMH. If you compare that to fiscal year 10, 12.8 would have been received. But if you look at the entire legislation in totality, there's an additional $2.4 million that you just alluded to that would be remitted over to GMH in actual cash from the tobacco tax. Also, in conjunction with that, an additional $1 million specifically will be given to GMH for their line of credit to be able to assist them for the payment of that obligation. And then in conjunction with that, there's a particular formula that I think it'll be best if yourself or Mr. Badassi would be able to explain as we proceed with the pages, where in fact GMH could conceivably receive in excess of the 12.8 that in cash that it had otherwise received or would otherwise receive in fiscal year 2010. So I just wanted to caution some of the perhaps individuals who are listening to this presentation that in conjunction with $8 million in GMHA pharmaceutical funds, that there will be additional funding provided through other mechanisms to ensure that that hospital facility continues to receive the supplement that it would otherwise receive in fiscal year 10, or had otherwise received in fiscal year 10 and in subsequent fiscal years. Thank you very much, Mr. Chairman, for that.
That's correct. The GMH pharmaceutical fund is a straight percentage of the general, of the business privilege tax, what used to be known as the GRT, is collected. So it's a straight percentage that was set in statute. One More Hospital asked us to adjust that percentage and also adjust the credit against that payment. It used to be that 100% of the pharmaceutical fund was credited to MIP payments, which means they don't get any cash from MIP. The hospital asked us, to the board, to reduce the credit allowed and lower the percentage. So, and then they would receive payments from MIP in addition to the credit that's given. So that proposal is in the GMH section on Chapter 3, is the health section. So, Senator Tenorio on the...
Yes, actually, I wanted to clarify something real quick. I was just given the document from the clerks with regards to adopting Section 1. Are we going to fill in a paper for every one of the sections we're adopting? Is that...
What's that? It's
motion to accept Section 1, for example?
Oh, no, I'm sorry. The motion of, remember, it's to add, amend, or delete.
Right, so I don't think we'll be needing to do that for every section. Okay.
Right, yeah.
What amount of the, on line 14, provision for tax refund payments is refunds versus EITC? Do we know?
Department of Revenue and Tax estimates that of the total refunds paid, approximately $40 million of the refunds that are paid of the set aside, the provision, is attributable to earned income tax credit.
So about 40% is EITC, and the 60 cent, since you're about 100 million, 60 million will go to tax refunds. And what was the current year that we're dealing with right now insofar as set aside for the same thing?
The provision for refund in this budget,
Yes.
is that what you're saying?
2010.
You're right. 101 million.
Oh, so it's right in the same ballpark.
Right, but that 101, remember, 15% of that went to pay for the EITC settlement. This year, we don't have that. That additional 15% is going to go towards regular refunds because there's only about 4 million left of the EITC settlement to be paid out. So we actually will pay more refunds this year because the settlement said that 15% of your provision for refunds will be used to pay for the court settlement, and that's been about 15 million. This year, 15% is still required, but we only have about 4 million outstanding by the time we get to the new fiscal year.
Okay.
So the additional 11 million is going to be available to pay regular refunds and not go to the court settlement.
All right. The other thing is, I just want to make sure I'm clear on page 2, line 4, you said other taxes. This is similar to your provision for tax refunds, and so it's a negative, isn't it? Is this a negative number?
No, that's this other taxes are your
Yeah, right. That's
use
JFK, you said?
No, that's use tax. The top one on top of that, the negative.
Privilege tax credit.
Yeah, that's.
So that's the JFK.
That's the
3
JFK.
million straight.
Around there, yes.
Okay. And you again, you said something about this from the governor? I didn't...
Well, when the governor submitted the budget in January, it did not include an appropriation or a tax credit for the lease. So we're including it.
All right. Can I then make a motion just to make sure it's clear? Tax credit, JFK rent? Can we just do that?
Sure.
If there's no objection?
Yeah. Any objection? Would be to amend line 3 on page 2 after tax, within the parenthesis, tax credit, JFK rent. On that motion, no objections? The amendment carries. Okay. All right. Thank you very much. I have Senator Muñoz-Barnes.
Thank you. I just want to have a follow-up, Mr. Speaker, on the income tax returns that are being set out, and I know that we talked about the $100 million figure and the set aside that 40% of that is for EIC. I wanted to just get an update on as far as the prior year obligations and where we at that. I know that the director has been expounding on the point that there's never enough, and I just want to make sure, how have we included the prior obligations into the $100 million set aside for the income tax returns, and where are we at today?
The provision for refund contained in line 22 would be the refunds that is estimated to be owed to taxpayers for tax year 2009. That is calendar year, for tax year 2010. And that's part of fiscal year 2010 and 2011. So this is for those individuals that will be filing their refunds beginning January of next year for tax year 2010.
For 2010?
Correct.
So for prior years to that?
Prior year, the estimated liability for tax years prior to 2010 is about 148 maybe. There's two figures. I think the audit estimates 184 or 215. 259 inclusive of fiscal year 2009. Maybe I'll just have Edison speak to that since he's looked at that.
I just want to make
sure.
Okay.
I'll take care of it. In the report submitted by the Director of Revenue and Taxation, we have approximately $15 million left in 2007 refunds that have to be paid, and I believe it's around between 30 and 40 million for 2008, and then almost all of the 2009, and then of course 10 will come online, and those will also become
and anything
liability.
before 2007?
It's pretty small.
Much paid for. Anything not paid before 2007 is because the taxpayer has not come in with additional documents. It's a problem refund, not a process refunds with a determined liability or on the part of the government that is owed to the taxpayer.
So, just for the listening audience sake, for 2007, we have about 15 million
About
that's
15.
still owed.
Yes.
And 2008, we have 30 to 40.
Correct.
And then for the 100 million that's being set aside right now, it would be for 2010.
And we
but
still owe about
2000
100 million for 2009.
Okay, and how are we still setting aside that certain percentage for the prior years?
Well, you'll see in page 7 of the bill where we start to prioritize the collections towards the payment of those older tax refunds. But we have a liability that's beyond our current ability to fully retire in a single fiscal year. Estimated, the audit, about 250 million. Rev tax estimates actually that exclusive of 2010, about 145, I believe, somewhere in that, right? So, any other comments on Section 2 on taxes? The federal sources of course, the Section 30. You'll see $52 million for Section 30, and then you'll see a reduction of 5.8 million. That's because 4 or 5 fiscal years ago, the administration submitted a request to Treasury for an amount on Section 30, and the amount was greater than what was due to us. So when they went back and reconciled, U.S. federal government says, we overpaid you by 20 million on Section 30. And what we're going to do is, beginning in beginning in this year, we will withhold 5 million per year until we get that 20 million we gave you. So that's why you'll see that there's a reduction of $5 million. And that's the first of 4 years that they're going to withhold that amount until we pay off that 20 million. So the total then for federal resources, immigration fees and indirect costs will total about 1.6. And so the total federal sources of just the Section 30 cover over amounts is about $4.7 million, 48 million. Use of money and property is 3.5 million. The other revenue categories that the government of Guam realizes are, of course, licenses, fees, and permits, and that's about 6.9 million. And then we back out 590,000 of that for what we call the Better Public Service Fund, and this goes back to Rev Tax to improve their technology there and make improvements in their processing of refunds and collections. So on the license, permits, and fees, we actually reserve an amount for Rev Tax right off the top so that they can continue to make some investments in personnel training as well as technology. And then, of course, we have the department charges of 2.2 million. Total general revenue fund collections of 546. And then, as required by statute, we reserve 2% of that for the retirement of the debt. And this is a requirement of statute, which gives us an available appropriation of 535 million for under general fund resources. The next portion of the revenue numbers are the special fund revenues, and these revenue are basically the collections from the charges that departments and agencies charge for the use for the provision of services. The Air Pollution Control Fund is an EPA fund. Better Public Service, as you see, is from Rev and Tax. From the collection, a percentage of the license and fees, and also inclusive of the highway fund that they receive a portion of. Chamorro Land Trust, which funds their operation, is from the leases of their property. The Corrections Revolving Fund is a fund that the Department of U.S. Immigration pays to the government of Guam for holding their federal detainees and prisoners on Guam. Customs, Agriculture, and Quarantine is the fund charged at the airport for customs fee. DPW Building and Design Fund, this is a new fund this year that is split, that allows the Department of Public Works building section, permit section, to keep a portion of the building permit fee to support their operations. The 911 is, of course, the dollar on all cell phones and lines assessed to fund the 911 emergency system. Environmental Health Fund, again, is an EPA fund. The Flame Fund is the fire emergency fund that is for the services they provide, which includes ambulance. The Pharmaceutical Fund, once again, is a percentage of the GRT that is remitted to GMH. So you see, we backed it out of the GRT or business privilege and put it in a special fund that goes to GMH. The Board of Accountancy funds the operation of the licensing and testing of CPAs, both on-island as well as off-island applicants. Guam Contractors License Board is the fund, of course, for contractors. The Environmental Trust Fund is a fund assessed on commercial insurance policies, is assessed a fee to be put into the Environmental Trust Fund. The Highway Fund is, of course, from the liquid fuel tax, of which a portion, again, goes to revenue tax. And you'll see that the total estimated collection is 2.9, and then a portion goes to revenue tax of the $1.02 million, which gives us, and then the Public Transit Fund gets a portion of that. And that leaves a net available for operations and appropriation from the Highway Fund of $19.5 million. The Guam Plant Inspection and Permit Fund, of course, is out of the Department of Agriculture. The Healthy Futures Fund is, of course, the tobacco and alcohol taxes. The Indirect Cost Fund, this year the fund, the indirect cost allocation on federal grants will be reduced. I think last year it was about 25% of the grant. This year it's, I think, 17.6%. The Land Survey Revolving Fund, of course, are the fees charged at the Department of Land Management for recordation and land transactions. The Manpower Development Fund is a fund for H-2B visas that are issued by the Department of Labor. Portions of the fund goes to the alien labor certification processing at Department of Labor, and of course to the apprenticeship program at the Guam Community College. The Police Services Funds are police clearances and other permits, gun permits issued by the Guam Police Department. The Appeals Board is the registration charged required to for architects, engineers, and land surveyors that are required to register with the Appeals Board to do business on Guam. Public Recreation Service Fund is, of course, the rental of the shelters at the different parks and at the Department of Parks and Recreation. The Public School Library Resource Fund is a portion of the immigration fee, the passport fee that's collected, that goes to support upgrading our libraries within the public schools. Public Transit Fund is, again, out of the, is this the Guam Highway Fund? The collections are allocated on the liquid fuel tax. A portion goes to mass transit, a portion goes to public transit, a portion goes to Better Public Service Fund. Safe Streets Fund is the same. The School Lunch Nutrition Program Reimbursement Fund is what we get from the federal government for the school lunch program. They reimburse the government of Guam and Department of Education for the meals served. Then there's a cash that's collected from the meals charged to the students, and that's from the Department of Education of about $875,000, which gives a total of $8.1 million under the school lunch program. The Solid Waste Operations Fund is, of course, from the tipping fees charged, both residential and commercial customers of the Department of Public Works Solid Waste Division. Senator Tenorio?
Thank you, Mr. Chairman. Mr. Chairman, does this also take in consideration what the government of Guam pays?
Yes.
It does.
Right.
Okay.
So this includes all
Budgets
revenues.
that are already...
Right.
Okay.
Right. So, for example, like all of us know, the schools are charged, and we budget for that, and that includes the revenues there. The streetlight fund is, of course, from the vehicle registration fees. The tax collection enhancement fund is a portion of that that goes to revenue tax to be used for personnel, systems, training to enhance tax collection. So, you know, and these are all statutorily required. So, in fact, the legislature, you know, as a policy has seen it in the past that we don't even have to say, here's a new appropriation, that there are money set aside to enhance tax collections at the Department of Revenue and Taxation. The Territorial Educational Facilities Fund is all the real estate taxes collected. This is dedicated to the Department of Education for capital improvement, as well as the debt service on the $152 million school bond issue that was issued about 20 years ago. The Tourist Attraction Fund is the hotel occupancy tax that is collected on transient lodgings. The Water Protection Fund and the Water Research and Development Fund are funds from, I think these are EPA-generated funds. And that leaves a total special fund revenue of $149,334,000. The federal matching grant and aids are monies made available to the departments and agencies from the federal government as matching of support for programs that are given to these departments and agencies. This is, in some cases, these are formula. In some cases, these are competitive. For the fiscal year 2010, we anticipate that the Department of Agriculture will receive $327,000, CAHA about $288,000. DICIT will receive $2.9 million. Department of Labor, $41,000. The Attorney General receives $4.6 million, and this is mostly for Child Support Division. Military Affairs receives from the National Guard Bureau. Public Health and Social Services, this is the food stamp, Medicare, Medicaid programs, and the University of Guam will receive $1.5 million. So that these departments and agencies, in addition to the local funds available to them for their operations, will receive $37,265,000 of federal matching grant and aid. The revenue available for Operation Summary, the total general fund revenue is, of course, $646 million, backing out the provision for refunds of $100 million, the 2% reserve, gives us a total general fund revenue of $535,231,229. And the special fund revenue to support the other operations of the government, $149,334,747. With the federal matching grant and aids, that gives us a total amount for operations of $721,831,871. And that is the revenue recapitulation of the total revenue available under Section 2. Is there any motion to amend or delete Section 2?
Mr. Chairman, just on the 2% general fund reserve, is the
Yes.
administration really doing this?
What's that?
Is the administration really doing this?
No. The 2% revenue reserve was not funded this year because the revenues actually did not exceed the 540 projection. So,
Oh, okay. So
right. So we didn't reach that, so there was no revenue.
So it's
set aside.
2% of the projected revenue,
Correct.
not 2% of whatever is collected.
That's right. It's not,
Okay.
that's a very, very good distinction, Senator. The reserve is 2% of the projected revenues and not 2% of
I
the
remember,
collected revenues.
Mr. Chairman, that this discussion came up when we were discussing the bill which authorizes the bond to pay the COLA, that we were going to actually write this into the bond covenant.
Right. So,
Okay, thank you. Thank you for the update.
thank you very much. Senator Tenorio.
So then the real question, Mr. Chair, is at what point do they set the money aside?
Right.
How far down the road do you decide? Of course, clearly, you know, the revenue and the collections, obviously, and the anticipated money. So at what point does the executive branch invoke that 2% set aside is really the 2% million-dollar question.
Right.
When do we actually put that money aside to pay back owed debt?
Well, you'll see in the other sections that we presented here that we have endeavored to structure a policy in the bill here that will set aside a portion of that revenue. Yeah. On an ongoing basis.
Because there's certain debts and interest that are accrued as a result of not paying back those
That's
debts,
correct.
especially on a timely fashion. So, it's 6 of one, half dozen of the other. So if you're not putting that money aside, you get down to the 11th month and you actually start, well, we're close enough, let's put it aside now.
Right.
I just like to look at those provisions that you're talking about.
Thank you very much. So no amendments or no to add or delete in section 2? All right. Section 3, authorization to pay and prioritize the payment of tax refunds. This is a section that, as we saw in the presentation by the Office of Finance and Budget Director, Director Badassi, that there are refunds that we get reimbursed from when we pay from the federal government, and if we just let those refunds slide, then we end up spending our own money and not getting anything back. And so this will prioritize the processing of the refunds so that we process those refunds that we would get reimbursed with from the federal government. And that, of course, is the additional child tax credit portion and the make work pay credit portions of the refunds that have a reimbursement feature once we process those refunds and pay them out. And so Section A would prioritize those payments. The earned income credit would be prioritized on those refunds. So I'd like to give just a little bit of time for you to read that. It goes up to Section 9. And let me just take a 1-minute recess while you read that, and I go do my duty. We are on Section 3. As we mentioned, there are past due liabilities under the income tax of the government of Guam, and each of these past due liabilities, of course, accrue interest and need to be paid interest. The interest is usually determined by the IRS and adjusted and given to the Department of Revenue and Tax. So we don't control what that interest rate is. Last year it was, I think, about last year, if not the year before, was 7%. I think it's been adjusted to 5.5%, somewhere around there this year. But it's still, accrues interest. So what Section 3 does is it prioritizes the allocation for the refunds to those refunds that have a refund component from the federal government once we pay them out. And that is the additional child tax credit and the make work tax credit. So this sets aside $5 million of the provision for refund to pay the 2007 refunds, $10 million to pay the 2008, and these are A status refunds, meaning that they're ready for processing and not a problem refund, and $65 million for the 2009 refunds and $15 million for the 2010 refunds. In addition, as you all know, we all get these requests for assistance from our constituents about, emergency, medical emergency, family deaths, and so forth. And so, of the provisions, we're actually setting aside a portion for emergency refunds for 2009 and 2010 tax years. And we did this in a feature actually in one of the bond issues where we set aside a portion of that for emergency refunds of individuals who have filed their refunds, have a family emergency, and have to wait. So we're setting aside a portion of that. And then the other sections of this 2, 4, 5, 6, 7, Senator Etta.
On page, On section 3, page 5, it's very clear the intent of that section that we want to pay out those ACTC reimbursements as soon as they're ready to be paid out so that then we can get the reimbursements. That's clear there. I'm a little confused though by paragraph B. It talks about prioritization of the EITC, but really after you go through all that discussion, it just kind of gives its language that one would find in findings and intent, but I'm not sure other than directing the director to provide a report. I'm a little lost as to what are we saying there in paragraph B, starting on page 6.
Yeah, the intent of that section, or the operative requirement in that section is just what is to so that we can definitively answer the question that was asked earlier. How much of this provision for refund, how much is actual tax refund, and how much is earned income tax credit refund that is a cash payment out of our general fund to an individual who's not paying into the general fund with a tax because his income is below a certain level and his deductions are such that even if he underpays his tax, he gets a refund on top of that. So this would direct the Department of Revenue and Taxation that when they process the refunds, that they actually tell us what that number is based upon the refunds process. And it's for data purposes, so
it's really just a more so
reporting.
Paragraph B is a reporting directive there to Rev and Tax.
That's correct.
To provide data.
That's correct.
And this is a long document, and I was thinking, do we really need to go into all those, the findings and intent here, as opposed to just paragraph? Again,
Sure.
just a matter of form.
Understood.
Just going paragraph B is really directing Rev and Tax to provide the data as articulated in lines 7 through 12 on page 7. Everything else is just kind of like information that has, it's nice, good background information. Maybe we should put it as a footnote.
Okay.
Just as a comment.
Okay. All right. Thank you very much. Senator Barnes and then Senator Tenorio.
As I understand the concerns from the previous speaker, Mr. Chair, I think it's really important because as I asked the question earlier in reference to the earned income tax credit and why that credit was imposed on us, and I know that there is a documentation or justification on another federal mandate that was imposed to our government, and when I asked about the possibility of any kind of reimbursement to us, like Section 30 and compact impact and all that, I was told by OFP that there's a federal unfunded mandate that we have to abide to again, and I think it's unfair. But I think personally, as we go through this process, that this justification needs to be in there. I was just hoping that there could be something further that we can ask for or look for or work with our good congresswoman to see what is it going to take, or how does it work in the United States in reference to this EITC, and is the burden out of the local government, or is it a federal tax reimbursement back to them?
The refundable portion or the earned income tax credit that is a cash payment portion is paid out actually from the Social Security taxes that are collected out of the federal EITC program. Guam is a federal mirror code of the IRS code, so that's how we have an EITC program. In the states, of course, the federal government pays the federal EITC program payment out of the collections from the Social Security tax. It was actually passed when Congress passed a law that increased the Social Security tax and the burden that placed on the employee, because now he has less money because his Social Security tax has been increased. And so if you were in a certain tax bracket with certain deductions, the federal government decided to ease that burden of having you pay higher Social Security tax by paying you back an earned income tax credit for being employed rather than getting off employment and going on welfare. and you're still making more money than if you were employed, especially with the increase in the Social Security tax. So they actually take the cash payments for EITC out of the Social Security tax. We pay Social Security, but they won't let us do that. We're trying to plead with them. We're trying to work with them. I've had, over the years, maybe 4 or 5 meetings, continuing to make this case that if it's part of the IRS code, we should get reimbursed for paying it out. Before the other component or the other reimbursable portion is the additional child tax credit. Before, the federal government actually was not giving us the refundable cash portion of the additional child tax credit. They just, so in one of my trips to Washington, I was able to meet with the IRS, and on top of the work that the Department of Revenue and Tax had done on that issue, when I went to meet with the IRS back in, maybe 10 years ago, we were able to convince them that we should get the refundable portion. So we entered into an MOU with the IRS, and we now, if we pay out from our local coffers any cash due to the additional child tax credit, they actually reimburse us for that cash payment. That's what we're trying to do with the EITC. When we have this kind of information, it helps us plead our case. As Senator Ada says, that's what we want to know, that's what's important, and that's what this is attempting to do for us. So, anything else? Okay, all right. Thank you. Senator Tenorio.
Actually, I think that goes a long way to pleading the case and ultimately saying that we're paying out money that's not being paid in.
Correct.
And so, yeah, that's a very, logical move. One question I have is on, you've allocated certain monies on page 8, lines 1, 2, and 3, certain amounts per year. What happens if these amounts they're strictly for those years? So what happens if there's surplus in those years? I mean, are we talking about they can't move them to the other categories? Do we have the flexibility? Because you're allocating monies. You're allocating monies for returns that don't have any disputes. For example, 2009, $65 million. So what happens if in the previous year there was a short because you got 10 million? Can they move monies to that?
I think the way it's written, probably not, and that would be a good idea to allow the movement between the categories.
So that's not currently part of this?
That's not currently part of the language in here.
Okay, so before I get to that language then, let me go to my second question just to go ahead and knock it out, and then we can ask them to maybe make an amendment. On page 9, at the top, you've got number 6, and it says that not less than 10% of the ACTC reimbursements shall be earmarked to fund vacancies and overtime for revenue tax, income tax processing, and income tax enforcement. And I understand the nexus here, but should we not also make that available for other divisions, for example, GRT, even though they may need additional collections or auditors in the GRT, should we expand that as well?
Yeah.
Because you get to a point where you get to a saturation state and you no longer need those type of personalities or those type of professions, so you want to move them into another area. Would that be a reasonable conclusion?
Yes.
All right. So maybe I can make that amendment then if you'll give me a minute. I don't mind the continuing conversation though.
All right. Okay. All right. Senator Tenorio will be Senator Espadon.
Thank you, Mr. Chairman. Mr. Chairman, along the same line on that page 9, item 6, it says no less than 10% of all ACTC. Is there an estimate of what that 10% would be amount to?
The 10% would be about 1.2 million.
1.2?
Yes.
Thank you, Mr. Chair.
Okay. So we'll be in a short recess. I think Senator Tenorio will. Shall we recess? Okay. It's after 5 o'clock. We'll allow Senator Tenorio is wishing to make an amendment. The chair, under our standing rules, can recess after 5 p.m. We'll recess for the evening and come back tomorrow at 9 a.m. Thank you.